Well, I am answering questions. If any of you guys have any questions, just send them through the chat, and uh, and then I'll answer them. So, in terms of what I'm looking for in the charts, still expecting dollar index to go up to 92. So, still looking for higher prices in the dollar index. And with that being said, I'm still looking for weaker prices in Euro and cable, so Euro USD and GBP USD. Let me take a look at those real quick. Yeah, so I think longer term, or at least I'm expecting we could get 1.38 by the end of the week for cable GBP USD. So 1.3800 could be the next level that we get in terms of a weekly objective on cable. But we haven't really been getting too much movement. In terms of a shorter term, my next target would be 1.39, so 1.39. And that's about 30 pips from where we're at now. That's my next downside objective for cable, though. That's really the only pair that I'm focusing too much on this week. Had a trade on USD JPY, and that pushed up, but nothing stands out as of right now that I'd be taking, at least until London session tonight, which my primary focus then will be GBP USD. Chris, can you hear me? All right, yeah, just if you can hear me, then yeah, just try logging out and log back in. So, yeah, GBP, and that's really it. That's the only thing that I'm going to be focused on for the rest of the week. Let me just take a look at the other pairs real quick. Hey, Chris, can you hear me okay now? Okay, all right, perfect. All right, so if you have any questions, man, just send them in through the chat box. I'm primarily just answering questions. Nobody asked any yet, so I was just kind of going over what I'm looking for in the charts for the next day or so. In case you missed what I said, though, I think the mic might have been messed up, but I am still looking for higher prices on dollar index. So next stop I'm really looking for would be this low here on this ICT bearish order block, which comes in at 91.78. So my next upside targets for dollar index are 91.80. So 30 pips from where we're at now. I mean, not 30 pips, I'm sorry. 60 pips from where we're at now. next upside objective, and then after 91.80, 92 would be my next stop after that. So 91.80, then 92 in terms of upside for dollar index, and that should cause weaker prices for cable GBP USD. Okay, I got you. So an ICT order block is just an up candle. There's two forms of an ICT order block. There's an ICT bullish order block and an ICT bearish order block. And the difference between the two is just simply one is support and one is resistance. So in terms of what they look like, a bullish order block is an up candle, a down candle. So a down candle before an up move. So once this day right here forms, once this day forms above this down candle, that classifies this down candle as an ICT bullish order block, which is just another term of support. But what ICT teaches is like support and resistance levels, not support and resistance zones. So typically you're looking for, like the high of the order block or the open of the order block to be the specific level that you're looking to trade off of. But I usually mark out the whole ICT bullish or bearish order block. That way, if it trades at any point into this, I consider it all support. And once it's in there, I wait for a market structure break on an hourly time frame in order to confirm that the buyers, or a market structure break to the sell side to confirm that the sellers are in. So once the candle breaks above it, then you've got an ICT bullish order block, which is the down candle before the up move. Any trade back into that here would and should act as support. So we go to the next day, bam. Traded into it, found support, traded higher. All right. So let's look at this. We have this down candle here before this candle broke this down candle. So now we have a new ICT bullish order block. So then we can mark this one out. Okay. All right. So we got this down candle before this up move marked out. Once we traded through it, next day we trade into it, find support. Okay. And then we push higher. So then we have this ICT bullish order block that's formed. So we can delete this one. And then, all right, here's an example of it not working. So this one broke it, and then price traded down, but we didn't come all the way into the ICT bullish order block. And then we pushed higher, and since then we've just kind of came back, took it out, and then pushed up again. And then so far broken below that. All right, so that is an ICT bullish order block. Does that make sense, Chris? I'll go over a bearish order block now. Okay, so a bearish order block is going to be the opposite. It's going to be an up candle before a down move. Once the down move breaks the up candle, then it's considered a valid resistance level or ICT bearish order block. All right, so let me find a good example and we'll look at it. All right. how to find the market when it's actually moving down. There we go. Okay. This up candle here, this up candle before this down move, once this candle here, so let's move it over. Once this candle here broke below this up candle, that made this up candle right here an ICT bearish order block. Resistance. Any trade back up within this level, that's why I mark out the whole thing, because it can technically go within it anywheres. And I wait until we get a break of market structure. So you can see it traded right up into it and then found resistance, broke lower. All right. After this one, we have another one that's formed. ICT bearish order block. Okay. This candle broke it, traded up, sold off. Okay. So once let me actually keep this up as an example. All right. So we have this marked out on the daily time frame. This gray box is an ICT bearish order block on the daily. So if I drop down to an hourly chart and I look at this, it's a big block of price action. All right. Let me make sure I'm looking at the right thing. What's going on here? All right. September of 2016. Sorry, I just want to show you what I'm actually, okay. All right, so we have that daily ICT bearish order block marked out. I'm not actually entering this until I get a defined break in market structure and that the sellers are, in place. Like the sellers are in the market. So what confirms that to me would be bearish price action. So lower lows and lower highs. All right, so the gray box, again, is the ICT bearish order block based off the daily. So it's marked out on the daily time frame. We're on an hourly time frame now. So you can see, broke below it. Once we trade back up into it, I'm not selling it yet. We form a high, then we form a low, then we form a lower high. This high is lower than this high. Then we make a lower low. Any push back up, I'll sell this. So it pushed right back up and retested the ICT bearish order block on the daily after confirming bearish price action on the hourly time frame. So I would have sold it somewhere up in here, and then it sold off. My targets would have been each swing low. So I would have had this swing low here as my first short-term objective, and then I would have gone out to a higher time frame because our trade is based off the daily since we marked it out, the daily ICT bearish order block. Then we can expect a bigger move simply based off the fact that we're trading off of a daily setup. So my second objective would have been below this low here and then these lows over here. So in terms of target, I just always target each swing low if I am bearish. So if I'm in a sell, I'm targeting each swing low, and if I'm in a buy, I'm targeting each swing high. And you can see over a couple hours, we get first objective and then second objective, and that is in terms of pips. We have 237 pips. So you can see, basing your trade setups off a higher time frame, then you can see once you base this off a higher time frame, then the moves that you get are a lot bigger. So does that explain both bullish and bearish order blocks for you, Chris? All right, cool. Yeah. And so now you kind of have a better understanding as well of like what I'm looking for in terms of entry, right? Because a lot of people, you know, they say that they don't know where to enter or exit, but entering and exiting is simple. You just need to know where you're basing your entries and exits off of. And if that's based off of a higher time frame, daily or 4 hour, then your likelihood of the trade panning out is higher probability, and in terms of pips, you're going to make a lot more money. Do you ever take trades if you see ICT order blocks on the lower time frame? So yeah, all right, so let's go back and look at this again. So this is an ICT daily bearish order block marked out with the gray box. Let's look at it on an hourly time frame. If there is an order block within another order block, so if there's an hourly or a 15-minute order block that forms within the daily order block, then that's just a further confirmation for me that it should hold as resistance. So watch, let me show you an example. All right. So the gray box is the daily ICT bearish order block. If we look at these two up candles right here, once they were broken, so this candle right here broke below both these candles, making both of these an ICT bearish order block. If there's 2 or 3 or even 4 next to each other, then I will use all of them as the ICT order block. So let me draw this out. All right, so we got the low of this marked out, and we never quite traded back up into that. But we also have these up candles here. So like I was just saying, these are considered an ICT bearish order block once this candle trades through it, but we never traded back up into it. But I use multiple candles if they're in a row. So right here we have 3 candles in a row, also aligning with the ICT daily bearish order block. So if I draw that out, all right, we trade through it here, trade back up into it. You could have sold it and had your stop loss above here. So in terms of risk, you would have entered at 32.28 and your risk would have been at 32.77. So like 50 pips or so in terms of risk, but your objectives would have been 100, 200 pips. That 274 pips or whatever that we looked at. So trades up into it here. Think about, you're using all of these candles. So it trades up into all 3, pushes lower, trades back up into them, and eventually sells off. And if we go even lower than this, I'm sure there's even more ICT bearish order blocks that would even further confirm it. So I do, but they have to be based off of a higher time frame, and I don't think the data goes back that far. But I think you get it. Does that help though, Chris, in terms of why? Okay, got it. All right, perfect. So and Chris, if you have any more questions, man, don't be shy. Go ahead and ask them while we're here. And if anybody else has any questions, just be sure to type them in the chat box and I'll answer them for you. Okay, Ernesto, so you want to see the fib used, like an example of it trading into it on a higher time frame and then using the fib as an entry, or what? Okay. Okay, all right. Entry. So, all right, we're going to use this example so we can go into a lower time frame, and it happened uh, more recent in price action. This happened in January versus what we were just looking at happened in 2016. So if we map out, let me get this out of the way. If we map out these series of 3 candles here, this candle, and this candle, that would be the ICT bearish order block. All 3 of them, because they're in a row. There's no down candle in between these 3, so they're all considered a support level for me, like the whole entire thing. So once the candles, this candle here closes, actually this candle right here closes below it. So any push up into there, here, 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 all of those are potential sell opportunities with a stop loss above here. Obviously this is going to be a bigger stop loss, and you know, this isn't going to be something that you're going to put like a lot of risk behind, but you're basing it off of a higher time frame level. So you don't necessarily have to, you know, enter here with a stop loss here with a take profit here, because you can get shorter term day trades by using your fibs and using things like that on a lower time frame. So make sure you have your higher time frame levels marked out first of all. So ICT bearish order block on the daily, marked out. All right, so first step complete. So let's look at a 4-hour time frame. All right, so we just went from a daily now to a 4-hour. All right, this whole piece of price action right here, from low to high, is the ICT bearish order block on the daily. Okay, I use my fibs on the swing that broke market structure. Okay, so what I mean by that is here on this, if we look at price action before the IC, so this starts the ICT daily bearish order block, this gray box. If we look at price action before here, we have a low, a high, a low, a high, low, high. So we have bullish price action, right? An uptrend, bullish trend. If we come over here, we start breaking lower, right? What happens? We form a high, a low, a lower high, a lower low. So I pull my fib on the swing that broke market structure. So there's a couple different options. You can use this swing here, but you're not really going to get a clear entry because it basically makes a full 100% retracement, right? So if I draw it from this high to this low, we basically come all the way up to a full 100%, but we still sell off. But I wouldn't use that swing because it's not based off of a key higher time frame level. What is based off of a key higher time frame level is this gray box, right? So we have another break in market structure, right? This high, this low, broke structure, right? We're making low, high, low, high, low, high, low, high, breakdown, break of structure. So if I pull my fib from this high to this low, I can use my fib levels for an entry opportunity, okay? So I don't use the 50%, so I wouldn't have taken this trade once it traded up here. But I do use the 61.8, 70.5, and 79%. So you can see we pushed up and traded into 61.8, 70.5, and 79. Or really we stopped just shy of 79 extend this over. So we came up and we basically topped right above 61.8. So 70.5 and 79 weren't hit, but I would have entered as soon as we touched 61.8. So not this candle, but as soon as this candle touched 61.8, I would have entered, and I could have had my stop loss above here. So that's one way of taking an entry off of a 4-hour time frame using the fibs, right? And I'm using this swing right here because this is the swing that broke market structure. Now, if I go this high to this low down here, you know, that I guess still technically works because it comes to the 70.5, but I don't use, you know, if we're using that swing, we should be using this high right here to this low. Okay, so this low, it originated from this swing here. And that's not valid to me because it goes back above 100%. So I always use my fib based off a higher time frame level as well as a break in structure. Here we have a break in structure. This move up is an ICT bearish order block based off the daily. Any retracement into that should be a good short. So we trade up into 61.8 and just shy of 70.5 and then roll over and continue lower. If you missed it there, you got another entry opportunity here. And instead of using that swing, you would have used the new swing that formed this high to this low because, again, low, high, low, high. We were making bullish market. We were forming bullish market structure on this 4-hour swing. Here, we started breaking down. We formed a low, high, lower low, lower high, lower low. So once that low was formed, we could have drawn our fibs on here. And if you missed the first entry opportunity, keep in mind we're still bearish because we have the ICT daily bullish order block bearish order block marked out. And we traded right up into 70.5. And you can see as soon as we hit that level, drag it over so you can see. As soon as we hit 70.5, it immediately topped and went the other way. So as soon as this traded lower and this became an ICT bearish order block, you could have immediately reduced your stop to basically nothing and break even within, you know, a couple minutes probably. Should the fib be drawn after? I'll go over turtle soup in just a second. Should the fib be drawn after the 4-hour swing high? What do you mean? At what swing high are you talking about? After the break in market structure? Are you talking about this swing right here? Oh, this one? This was a swing that broke market structure too. So I mean, you can use this as well. I'm just using the full swing. So this is like if you do like A, B, C, D pattern or whatever, this is A, B, C, D, right? So, okay, yeah, gotcha. So yeah, you could use this and use this as an entry opportunity, watch. So I could draw from this high to this low, and it spikes right up into 70.5 and 61.8 and then trades lower. So, and then you could have had your take profit here and could have got 192 pips with that. So that, I mean, yeah, you could have used this one too. It's however you see it best. but just make sure that you're always using, a swing that broke market structure. So even though this isn't the full swing and it's just the second leg of the swing, it's still valid. But you just have to keep in mind, if you're using the full swing, then you have to wait for a retracement within the full swing, which would be here, which takes out the stops here. And that's primarily why I use the full swing, is because if you use the second leg or a swing within the full swing, then you're likely to have gotten a good entry, yes, but it's also likely to be a short-term high or short-term low that eventually gets ran out, which they did here, and then took it lower. So does that help? And all a turtle soup is it's another concept that ICT created. So it's just a move above a high or low, and then a reversal. So there's stops above here, which could have been your entry based off this swing, right? But you're more than likely your stop loss is going to go above this high once it starts trading lower, right? That's the same thing a lot of other traders are going to do. So, the market makers or whoever moves the market, they know this, and ICT calls a turtle soup a pattern where they take out the stops and then they trade lower. So it's what you see in here. And that's why I use the full swing, because by using the full swing, you'll usually get the turtle soup entry, which is here, versus the entry that's before the turtle soup that ends up getting ran out. So that's a perfect example of a turtle soup as well. And then it's the same thing, it's just opposite for a buy, right? So if you look at this low right here, there were stops under this candle here. Didn't quite trade below it here, but this one traded below, started pushing higher. All right, breaking market structure. Here we traded back into this ICT bullish order block, pushed up. So once you understand what you're looking for, it doesn't matter whether you're buying or selling. You can get in on either side and be right both ways. But this is an example of a buy turtle soup, and right here would be a sell turtle soup. All right, Chris, my emotions want to trade every day. How do you hold back? Simple, just turn off the charts. Only look at the charts whenever you're trying to look for a trade. By you wanting to trade every day, all day, you're just exposing yourself to more risk and potential money to lose. And as a new trader, it's likely that if you are a new trader, you're probably thinking, you want to trade so much because you're trying to make a lot of money. But you also have to remember, by trading that often, you're opening yourself up to more risk, where it's not always making money. You could also lose money. So I just stay away from the charts really throughout the day. I'll be in front of the charts through London and New York session, but that's really the only time that I'm actually focusing on the charts, and I'll mark up specific levels and stuff that I'm looking for to be traded to during the session. But other than that, I'm not watching the charts looking for a trade setup, because by doing that, you're just going to force yourself to see more things that aren't there. And over time, after you've been trading for a while, yeah, you could stare at the charts and probably make money, 80% of the time trading every day. But you also, realize that you don't want to have money at risk every day, 24/7. What's a good pair to start studying as a new trader, trying to focus on one? I'm in the US, so in terms of pairs to choose, I don't choose anything outside of the majors. So if you don't know what the majors are, that's just anything that's paired with the US dollar index. So Euro USD, GBP USD, USD JPY. These are mainly the ones I trade. So Euro USD, GBP USD, USD JPY, and USD CAD. DXY is the dollar index, and Euro GBP. I just use these two for a direction. So if dollar index is pushing up, then I expect Euro and GBP to push lower. And I use Euro GBP to help me determine whether Euro or GBP would be a better trade for me. So it depends, I guess, where you're located. But if you're in the US, I would choose one of the majors. So anything paired with the dollar index. So anything that has USD in the pair. And if you're not in the US, I mean, I guess it doesn't really matter too much, but it doesn't necessarily matter what pair you pick. I mean, just understand the basics. Like GBP JPY is also known as the beast and is one of the most volatile pairs. Most exotic currencies, so things that aren't paired with the dollar index, like Euro GBP, Euro AUD, Euro CAD, CAD JPY, things like that, they can be more volatile. But in terms of like my system that I've learned from ICT, I don't really like practice or study it in anything other than the majors. But it works anywhere. It's just I prefer not to trade like exotics or anything like that. Their price action isn't as clear as the majors. So me personally, I would stick to anything with the US dollar. And if you're just starting out, then you could really start with something like AUD USD, which is like a slow moving pair. And AUD USD is something that you could practice on and just look for like 20 pips or so, for your trade setups. But in terms of movement, it really doesn't move too much. I mean, it's really sold off strong with the dollar rally, but in terms of pips, I mean, it's not like it's not as big as like something like GBP USD. So that's 260 pips, and just for as an example, GBP USD could do 260 pips in a day, and it took AUD USD 1, 2, 3, 4, 5 days to do this. So this would be a good pair, I guess, that you could stick to starting out. Give it like 6 months or so, and then move to another pair if you don't really like the way that this moves. But I mean, it all works. It all works the same. You also just have to make sure you put in the time to, look at the charts and study the material and figure out the things that you're looking for. Because trading is just a matter of, finding what you want to trade and what it looks like in the charts, and then just trade that over and over again. Does that help you out, Hugo? No problem, man. Back to turtle soup. You would wait for break of market structure, and as long as the next low doesn't break, that qualifies a turtle soup. Yeah, I just trade naked charts and I mark up my own levels on the chart. So I mark up my support and resistance levels and all that. But I start off with the chart that looks just like this, yeah. Okay, so wait, Chris, let me see. You would wait for a break in market structure, and as long as the next low doesn't break, that qualifies a turtle soup. I guess I'm confused as to what you're trying to say, Chris, but I mean, here's another example. So it's like like a trade above it can, you can see it on any time frame. I mean, here's an example. Like we're on a weekly time frame on AUD USD, and we got a high that forms right here, and then this candle pushes up and it trades right above that high and then immediately rejects and trades lower. So there's stop orders above this high right here. So anybody that's making money as this pair is moving down, okay, as it's moving down this whole way, their stop loss is up here, and then they trail it here as it's moving lower, right? Once it starts pushing back up, it's going to clear out their stops. So it took out the stops that were here, then it took out the stops that were here. As soon as it took out the stops above here, it rejected and started trading lower. These candles broke it. This was formed as an ICT bearish order block. Could have had an entry here as a second opportunity if you missed the turtle soup entry here. So does that kind of explain what a turtle soup is for you, Chris? It's just you're looking for the market to trade above or below a previous high or previous low and then reject. So again, just like you see here. So you got a high, market trades above it, rejects, trades lower. Okay, so yeah, all right. So you're just looking for a high or a low to be taken out. So this candle right here, this candle formed a low. Market traded below it, then traded higher. This candle formed a high. Market traded above it, then rejected. All a turtle soup is just this. That, and that. Okay, because you have stop orders that are resting above all of these key levels. Stops resting below this low, so the market trades below, pushes up. Stops resting above here, market trades above it, pushes lower. Stops resting above here, market trades above it, pushes lower. So all a turtle soup is just a move above or below a key high or a key low. So if you're looking for a buy, you're looking for the market to trade below it and then push higher. If you're looking for a sell, you're looking for the market to trade above it and then trade lower. Does that clear it up for you? Even me? I don't think I'm saying that right. I'm sorry. Okay, what's confusing you about it? What aren't you understanding? The trade above and below is what confirms it as a turtle soup. A turtle soup is just it's a term defining what this pattern is. So all the pattern is just this. Like you have a low, right? So right here is a low. Okay? This is a low. So a turtle soup is just a move right below that. And instead of confirming that as a break in structure, like instead of being a continuation move lower, it rejects and trades higher. So we consider this, whenever this happens, whenever it trades below it and rejects, that's a turtle soup. Does that make sense? So you just have to see it in the charts. So, you know, right here, it looks a lot different than how it looks right here, right? Because it's a lot closer together. But over time, you just have to realize that you're looking for a low to be traded below and then traded back above. And in the case of a buy, and then in the case of a sell, you're just looking for it to trade above and then reject and trade lower. So does anyone else have any questions before we hop off here? So in terms of trading the turtle soup on a high or a low time frame, it really depends, right? Like on a lower time frame, this wick right here that's formed on this weekly candle is going to look, it's going to be multiple candles instead of just one candle. So there could be a lower time frame turtle soup that also forms that I would take an entry based off of if it's around this level here. So I'm looking at the price levels. So the high of this candle is 81,250. So the high of this candle is 81,350. All right. So within that move above it, there was some type of trade setup that formed. So let's see if we can see it here. Okay, yeah, here it is. All right, so right here, this blue line is the weekly turtle soup. So if you look on a lower time frame, this is hourly, we got stops resting above this high right here. Market trades lower, pushes right back above it, clears out those stops, as well as clearing out the weekly stops. Right here is where that weekly wick was formed. Then it trades lower. So as long as it lines up with a higher time frame like this, then yeah, I would have taken this. My favorite trade setup though, Chris, is simply just I look for a higher time frame to be traded into, and then I look for a break of structure and pull my fibs, and then I'm looking for a trade up into those levels or into that or retest the structure. That's literally the only things I'm looking for whenever I'm looking for a trade. Yes, you can use the fibs on lower lows for scalps. Yeah, if you just mean can you use the fibs on break of market structure on a lower time frame, yeah, absolutely. And yeah, you would just be using that for scalps since you're basing your trade setups off, say, a 15-minute or something like that. And Hugo, for support and resistance, all I use is ICT bullish and bearish order blocks. That's the only support and resistance I use. All right, guys, any other questions? I am about to wrap it up. No problem. All right, guys. Well, if there's no more questions, then I'm going to hop off here. I will upload the video as soon as it finishes. So I'll post it on YouTube, and then I'll post the links on my in the Telegram and in the Facebook group. All right, guys. So I'll see you later, and if you take any trades, good luck, and I wish you success. Yeah, no problem, man. No problem. I'm gonna keep putting out the stuff on YouTube. That's gonna be like educational and all analysis stuff, so you guys can just try to get more of an understanding day by day of how I look at the charts. All right, guys. Appreciate your time. Thanks for coming out, and I will see you guys next time. Have a good one.